What's good, y'all? Right now we looking at this Bitcoin chart, and I use Bitcoin charts for reference because all the crypto usually run concurrently. They all move the same way. You see this Dogecoin, Ethereum, Litecoin, they all having the same pattern. They all moving the same way, going through the same things right now. So basically I'm gonna give y'all the rundown of what's been going on. Everything been happening with the government trying to crack down on crypto for a tax fraud so far up to today, the 27th. It's been confirmed over 100,000 Bitcoins been sold back to the market. And these was all done by whales. They say on the other hand, older coins remain unflinched, which means they holding their positions with the amount of 10,000 to 100,000 Bitcoin and adding an extra 125,000 Bitcoin to their portfolio since the dip. A lot of what's been going on is the cryptos being brought to people's attention and more people buying in, and they not knowing how this market work, and they not knowing how to play the game. So when they bought in at the higher price point, market pulled back, so they stranded in their positions. You know, they in the negatives, and that's a lot of money to lose. You know, that could be their whole account for a lot of people. That's the way it's going. So anyway, we looking at the chart, and what's going on here is it ran into a resistance at 40,000. It had trouble breaking that 40,000 resistance level, and what that means is price is about to head the opposite direction, putting people further in debt, hurting a lot of people feeling. So what you see, this blue line, the 200-day moving average, the green line is the 100-day moving average, and the red line is the 20-day moving average. The 20-day moving average is the fastest, most current, and you see it cross this 100-day moving average, confirming the downtrend. What that means, and you see here now, these two lines is now the 100-day and the 200-day moving average is acting as support and a resistance. So you're gonna see either within the next couple 2, 3, 4 days, whatever, you're gonna see if this 20-day moving average either crosses this 200-day moving average and go further down, or it's gonna reject and go back up the other way, and then it's gonna test the previous resistance right here around this 200-day moving average. So what that means is if price cross back over this 200-day moving average is when a lot of people want to look to exit their positions. I'm gonna take y'all back to 2017, show y'all what's going on. Here we go. Do y'all notice anything different? No, you do not. Nothing changed. History repeating itself. That's what you see. That's what's going on. So look, let me help y'all out. This shit getting crazy. Alright, now top chart you see is 2017 going into 2018 here. Bottom chart is where we at today. Alright, bottom chart 2021, top chart 2017. Now these is facts here that you got to stick to. These facts, you can't go off what you think. You got to stick to these facts now and what you see going on here. I'm gonna zoom out so y'all can see the bigger picture. Came in as a strong uptrend. Same thing happened here. Strong uptrend. You see 2017 came up from 560, hit all the way up to almost 20 bands. That's a lot of money to turn 500 into 20,000. Yeah, in a matter of a year. You know, that's cool. So let's look at last year, 2020, up until now. It hit an all-time high last month of 65,000. Well, 64.9, almost 65,000. Major play alert. That's what happened, and now you can see what's going on now. And you can see what had happened, and you can compare it to what's going on now. It hit the high, came down, fell around that 50% level, came back up, dropped all the way down, went back up to that 38.2% level on the Fibonacci, and then, you know, it tried that level for support, fell down, never made it through the door. You know, hit the bottom, came back up, hit the 23% level, rejected, wasn't letting the dough, kicked them back out, and you can see it's hitting the support right here until it eventually breaks out. So you could tell what's about to happen here. It's at that 23.6 level So what it's gonna do is gonna be testing this level, and to hit that high is unlikely right now. It's unlikely for it to even match the previous high, so within the next couple days, a lot of people want to be looking to get up out their positions, or else they going further in the Red Sea. That's what's gonna happen. That's why I'm telling you what I know, not what I heard. This was going on. History is repeating itself. The crypto market runs in cycles. That's what happened 2017, regulated, came back down here, back from 20,000 back down to 3,000. Just imagine if you bought in around 18,000 and then dropped down to like 3,000 for like a year, that shit crazy. But 2019 jumped back up to 13,000 until 2020, 2021. Eventually hit that high of 65,000. So now what is going to happen, if it crosses over that 200-day moving average, a lot of people should look to exit their positions, take your profits, set your stop losses, all that good shit, because it's probably about to go the fuck down, all the way down to the bottom down. And also, spectators, now is a good time for y'all to actually invest in. You might get this on discount. So that's what the game is all about, is 75% waiting, 15% analyzing, 10% execution. So you gotta spectate a lot. You gotta see what's going on instead of just diving in head first. You gotta analyze your situations and make you a plan and see what happened. You gotta lay in the bushes, look through the scope sometimes to see what's going on, before you just run into battle. But that's what's going on. Hopefully a lot of y'all could get out y'all bad positions that y'all are in, keep y'all's head straight. I know it's bad. The best bet is to average down around the support level around 37, and if it breaks that resistance level of 40, you should look to exit. Make you a plan, get comfortable with a stop loss, take whatever you can, get out of it. I just wanted to update y'all. So until the next time, I'll get with y'all.